The latest escalation adds to a series of geopolitical shocks that have influenced oil markets in recent years, including Russia's invasion of Ukraine and ongoing tensions in the Middle East. But analysts say Venezuela's limited role in global oil supply and the nature of its crude are likely to prevent a significant or sustained price surge. Market analyst Patrick Matidi explains.
But that being said, though, we do expect some impact on the oil market, but not significant. So maybe $1 or $2, increase in the oil price, but it's unlikely to be sustained. And we expect over the next couple of days, for that to subside. Obviously, a lot will depend on how Venezuela, its allies in OPEC, and other friendly countries respond. But at this stage, based on what we are seeing, and I think there is probably going to be a lot more action on the geopolitical side than more on the financial side with regards to the oil price.
Matidi says in the longer term, oil demand has been in steady decline over the past 2 decades as countries increasingly move away from fossil fuels towards alternative and renewable energy sources.
But secondly, even today, as things stand, there is no supply of oil in the world, right? There's actually, if you look at the International Energy Association, they continue to predict, an oversupply in terms of what the OPEC countries and other producers are able to produce versus the demand. So even if Venezuela gets shut down, for the next while, it is unlikely that you will see a shortage of oil in the global economy and therefore a sustained, oil price increase going forward.
As a net oil importer, South Africa faces higher fuel costs, inflation and rand volatility. Venezuela's crisis also increases investor caution toward emerging markets, raising borrowing costs and exposing South Africa to greater external economic risks. Nosipho, Radebe, SABC News, Johannesburg.